AMD reported results this past week, and I have some questions, especially on how to forecast those gross profit margins going forward. And how do we forecast out the growth in some of these higher growth segments, which we do expect to potentially slow down in the near term, especially that client segment. So that's what I'm going to dive into in this video. So guys, as you smash that like button, let me run that intro. What's up, guys, and welcome back to the channel. And AMD is a name that I know a lot of you guys are concerned with. You guys have it in your portfolio, and so I do want to give my thoughts on this company. I do have a model built out on the company that a lot of the Patreons do have access to, and so you can see that the shares actually rose as they release their results. And I do believe that the data center segment provides a strong long-term secular demand as we move further into the cloud, but I assume that there's going to be a strong global recession that'll bring us backwards. And so that's kind of my expectation, but we could have a strong global recession, so you got to be careful of that. But a strong global recession will bring everything down, and so there are really no places to hide. But taking a look at AMD throughout the year, notice that a lot of the risk has been taken out of the security because it's down 60% year to date. And that is net of the results that they recently released for the quarter. So people still remain pessimistic, or at least not as optimistic as they were previously, or at least at the beginning of the year. And notice that in the third quarter, revenue actually grew by 29%. And I'll break down exactly how that happened, but you can see the company's explaining it here that the data center segment, the gaming segment, and the embedded segments were the one that led the charge. And here's more of a breakdown as to what happened in the segments for the quarter. So the data center segment had revenues of $1.6 billion, but the more important number is the fact that the data center was up 45% year over year, and that's really driven by strong sales of their server processors. With the client segment, the revenue was $1 billion, which actually was down 40% year over year. So the client segment for you guys is the segment where they compete against Intel with the consumer PCs. And so reduced processor shipments resulting from a weak PC market and significant inventory correction across the PC supply chain is causing the slowdown. And this is one of those things that Michael Burry warned about, where there might be a bullwhip effect of too much inventory causing issues right up to the supply chain, right up to the manufacturers, and you're seeing that happen with this segment now. The gaming segment had revenues of $1.6 billion, which is up 14% year over year. And largely, the growth has been driven by semi-custom product sales, particularly offset by their lower graphics revenue. And I believe that the graphics revenue has been impacted by the pullback in the crypto mining space and, of course, the slowdown in the PC consumer. And they're saying that the decrease is primarily due to inventory, pricing, and related charges in the graphics business. So they're largely blaming it on a slowing consumer, but I do believe that a piece of it is also resulting from that move away from the crypto mining space. But you guys who know this space better than I do, let me know in the comments what you think is driving the slowdown in the graphics business. I'm forecasting graphics to slow down considerably in 2023. Let me know what you guys think. And of course, the embedded segment revenue was up $1.3 billion. And, you know, it's not easy to compare that year over year because they're including their acquisition of the embedded product revenue. Now here's the selected corporate data breaking out the segments. I did the math to the right for you guys, so you can see that the data center revenue up for the quarter is 45%. Year to date, it's up 73%. For client, of course, it's down 40%, but year to date, they're actually up 5%. So you sort of have to read into the nearer quarters to forecast out the slowdown. With gaming, of course, you notice that gaming is slowing down. Year over year, they're up 34%, but quarter over quarter, they're only up 14%. So this is what I mean about, I think that gaming is going to continue to slow down. And then, of course, notice their free cash flow is pretty healthy. Year over year, they're up 8%, and quarter year over year, they're up 10%. And so very interesting to take into account. Now, what exactly does their outlook look like? So what they're saying is for the fourth quarter, AMD expects revenue to be up approximately 14% year over year. So that's good. And of course, they give you a plus or minus 300. For the full year of 2022, AMD expects revenue to be approximately $23.5 billion plus or minus at $300 million. And so they're essentially saying that what's going to lead the revenue growth for the year is their embedded segments, which of course is a result of the inclusion of the revenue from their acquisition. Correct me if I'm wrong, but I think it's pronounced Xilinx. which is the company they acquired, and of course the data center segment, which of course I've said it before and I'll say it again. I believe that that data center segment has a long-term secular tailwind growth characteristic, which is going to continue to grow revenues, and so that's how I'm forecasting it out. Now, the one thing that I do have to warn you guys is notice that their quarter-over-quarter earnings per share growth did turn around following the trend of Q2 2022. And so what you guys need to do is be careful as you forecast out growth for the segments. Don't use the historical segments because they're not acceptable anymore. And I would say, newsflash, they never are. We have to provide an opinion going forward. And sometimes it can be influenced by historical experience, but in this situation, I just don't think so. And so we got to dig in and develop an expectation for each segment. And this is my model that the Patreons get access to at the lower tier. And so if you want access to this model for AMD and all the other models that the Patreons get access to, you can access that at the lower tier of the Patreon. But notice here that for the data center and the embedded center, which of course includes the Xilinx acquisition, I remain optimistic on both these segments. So for the data center, I do believe that there might be a bit of a slowdown in 2023. And so I'm growing at around 10% for the segment, growing revenue that is. And then I'm increasing the revenue growth to around 15% in 2024, sort of like as a little bit of a pullback, and then 12.5% thereafter. With the client segment, I actually think that 2023 could be rough. I'm thinking that the client segment could drop 5% in 2023. It actually might drop further than that, but I'm just giving it a negative 5% revenue growth in 2023, 0% revenue growth in 2024, and then growing it at 5% in 2025 and 7.5% thereafter. So I'm not seeing huge growth in this segment. That 7.5% might be optimistic, but I'll leave it at that for now. With the gaming segment, once again, I think this slows down. This actually could go negative in 2023, so we got to watch this carefully. But, you know, I'm only growing it at 7.5% a year after 2024. And then the embedded segment, I'm thinking around 10% in 2023, and then 12% thereafter. And the reason why is because I do believe that embedded technologies, and with the data center, of course, the continued focus on growing out the cloud business, I think these two industries have a lot of secular tailwind growth ahead of them, and so that's why I'm being a little bit more optimistic on them. But notice overall that in 2022, revenue is expected to grow at 46.5%. That's that 23.5 billion that management is expecting. So notice that I've dramatically slowed down revenue growth, which in my defense is pretty normal for me, as I tend to always be a bit more pessimistic, but also we are in a slowing economy with a pinched consumer. So this might actually be a little bit optimistic as well, but I'm going to go with it's probably accurate and it might be the most reasonable base case scenario. You guys let me know in the comments what you think. Now, revenue is not the only thing I'm forecasting. Of course, you got to forecast right down to net income. So notice that AMD is guiding for 52% non-GAAP gross margin in fiscal year 2022. I match that for 2022, but in 2023, I actually bring the gross margin down to 50%. Note that it could go back much further. And so I just wanted to point out that their net income margin was 25.5 in 2020 and 19.2 in 2021. In 2022, it looks to be like it's going to be around 19.9%, so 20%. But in 2023, I've brought that down to 16.7%, and I continue bringing it down to around 15.6, 15.7% thereafter. Now, can the net income margin go down even lower? Absolutely, it could. That's kind of where I'm keeping it. So I'm being a little bit pessimistic on their overall net income margin, so essentially pessimistic overall on their profitability. You guys let me know how you guys are forecasting out their profitability, but this is a huge driver with the valuation. Now, next we're going to go into the valuation, but before I get into the valuation, I just got to remind you that approximately 80% of the viewers on this channel are not subscribed, so please, if you have the opportunity, hit that red subscribe button. Now, let's get right into the valuation. So this is my base case, and as a result of the less optimistic valuation or forecast for revenue and gross profit margins, I do believe that this could potentially be a pessimistic valuation. I'm calling it my base case, but I could be wrong here on the gross profit margins. Those gross profit margins could come down even further. And so right now I'm just saying that the company is still undervalued. Its current share price is $60. I think that it's worth around $70. So it's trading at approximately 85% of its overall valuation. Now, this is one of the best in breed chip designers, I would say. Just call them chip makers for short. And so you're effectively able to buy a great company for a discount to their intrinsic value. So it's not bad, but you guys know how I am. I'm very much sort of like a margin of safety investor, so I would love this at $35 or lower. I don't know if I'll get it at that low, but we'll see what happens. Notice that this EPS valuation is much lower than what I previously had it for. And the reason why is because I've just been doing more work and trying to understand the segments and try to understand how to grow this thing out. Previously, I don't think I had the best understanding. And you know what? I might be a little bit pessimistic here. So you guys let me know in the comments what I'm missing. And here's my valuation if I take up margins back to the 52% and I grow the data segment out at 20%. And of course, I have a terminal multiple of 20 times earnings. So this is closer to the valuation that I've shown you guys in the previous video. So you can say that the EPS valuation is somewhere around 93, 94, even closer to $100 if you really wanted to. And so you can say that the share price is cheap relative to its valuation. But like I said, I think I'm a little bit more pessimistic than what this valuation would say. And just going to another valuation, just to show you how much it changes if you change the margins. If I bring down margins from 50% to 40%, notice how the stock is grossly overvalued even after such a large share price decline that they've had this year of that 60%. So that margin is something to really look out for because the share price as a percentage of valuation is almost 150%. So you guys really have to take a position on that margin. It's really hard to do so. So it's something to really look out for. Let me know how you guys are thinking about the margins going forward. I do think that the margins come down because of a weakening consumer. Look, you might get some reprieve on that with higher margins for their data segment and their embedded segment. I agree if you make that argument, but I just don't know how to think about it. So effectively what I'm trying to say, it's not easy in this environment. A lot can happen. Nothing is inevitable. And so I'll leave it at that. But if you guys want to see sort of my valuation for another competitor, NVIDIA to AMD, you can get to that NVIDIA video right here.